Good afternoon, folks. Today is Saturday, May the 28th, 2022. Tim Davis here with another quick video. This one's going to be strictly on oil, strictly on oil. So as you guys know, whoever's been going to the pumps, you see the gas prices are not letting up, and they seem like they're constantly going up. If you're on the West Coast, a lot of folks over there on the West Coast already see $6 gallon oil. Well, I want to draw your attention back to history, and a lot of times history tries to mimic other areas and not necessarily, repeats itself exactly to the T, but history sometimes finds a way to mimic previous history. And it's no different to what's happening now. I want to show you, we're going to do a quick chart analysis on oil. And we're going to look at some individual oil stocks, individual energy stocks as well, as they start to correlate and follow oil with the prices of oil. Here is a 20-year weekly chart of oil. It actually goes back a little bit further than 20 years, but I want to draw your attention to one specific area in time itself. And that is the high we seen back in 2008. Right there, 147.30. And I want to highlight that because in 2008, when we hit that 147 level in oil, we started to really see the air come out of not only oil, but we've seen the air come out of the market as well. So from that point all the way down to the bottom of 2009, that's when we really start to see capitulation, not only in the market, but also in oil prices. Now, is the same type of setup about to happen now? That's a possibility, folks. We already see the overall weakness in the overall markets. And with these big wild swings, trust me, volatility is still here. It's not gone anywhere, and the bear market is still in full force. And normally when we see oil prices continue to ramp up, normally they are heading towards a peak and then a flush. That's just how it happened before. So we think we could be in store for the same type of setup. Now, with that said, in the meantime, there's plenty of chances to take an opportunity. I mean, to lavish an opportunity of taking advantage of the current movement in oil and or energy stocks themselves. So I highlighted that peak back in 2009. Now let's take a look at what's been happening now in oil prices. So since we hit this low of around $6 a barrel, folks. Yeah, believe it or not, oil got down to about $6 a barrel back in 2020. We have not seen nowhere near those prices since then. We've been in a nice uptrend with a couple pullbacks along the way since 2020. Slight pullback there, but the overall direction was up. Slight pullback here. Overall direction still up. Slight pullback here. Overall, this direction is still up. Now, let's look what's happening now. We entered a consolidation phase, not a pullback. A lot of people are like, oh, oil's pulling back. No, just a consolidation phase. So went through a consolidation phase, and I'm gonna stretch this out just a little bit further. So we went through a consolidation phase, and those folks who pay attention to what's happening in our market, and if I had a drawing tool, I would draw. Let's see, can I annotate something here? See if I can draw on this chart. And I think I can. So look at that. That's what's happening with the price of oil. Folks, we are, I like this drawing tool. It's my first time using this on Zoom. So you can see oil got up to a certain level right there. Oh, I don't want that. Clear that one, clear that one. I want the same one I just had. So oil got up to a certain level right around here. And then we kind of like pulled back, but not only did we pull back, but we did not really break this trend level. So that trend level was not broken. Instead, what oil did is just pretty much just started a nice little rounded bottom. And what it looks like it's about to do, I don't think we're gonna see it. We could see a little check back to this trend line, but I think what's about to happen is oil is about to break out and surpass that possible high. So that's what the setup looks like. We could be looking at for oil. If you look at the full stochastics, it's already starting to turn back up. Awareness percentage is already back up, so heading back up into that overbought territory. And RSI looks like it came down a little bit, and it's like it's ready to turn back up. So all looks like a clear, good play as of right now as we speak. This is a weekly chart we're looking at for oil. So where could prices be headed? Again, if we find a way to clear this peak right here, we could be headed much higher. So that's something to pay close attention to, and I'll show you what some of the oil stocks are showing us as we speak now. Let's get rid of this for a second here. Now let me go back here and look at the peak, and we'll try to draw some Fibonacci retracement tool, which is going to show us what are some of the possibilities for oil. So I'm gonna go all the way back here to where we 2008, 2009, the prices capped out at around 147. Now, anything is possible. Could we head back to that level? That's possible. But let's see what this Fibonacci tool is showing me. So if I was to set this fib up, let me get my fib tool out first. And I'm gonna trace from this high. Trace from this 147.43 high. Once I find it, put my cursor right on it. All right, and down to this 167 low. I mean 675, or should I say 667 low, where we reverted back to before we started to bounce again. So we hit that low, and now we hit that low. Now it's like we're trying to retrace this entire move from this 147 high. So we hit that 147 high, then over the past 20 years or so, try to rally up, but eventually ended up down here. Now it's like we are trying to retrace this high because we surpassed previous levels in here. You know, price action already surpassed previous levels, got to certain levels, pulled back, and just continue to rise. Now, it looks like we are attempting to retrace this entire move from that 147 back up to 147 possibly. So if I stretch this out to look at where we are now, on this fib chart, right back up to the 78.6% retracement, like we're ready to break through that. And if we break through that, it would not be a hard task for us to get above 120, 130 even, maybe even back up here to that 147 level, to the top of this fib line, folks. I mean, it looks like we could be possibly headed that way to challenge those highs that we've seen back in 2008. Then we have to see what happens after that. If we look at a quarterly chart, let's look at a 20-year chart. So look at a 20-year chart. The same fib levels in place. Look how, you know, we got a big spike up to that 129 level and pull right back to that 61.8% retracement. Challenged that a little bit, and then we held that level, and then we starting to move back up. This nice strong candle that's starting to form now. Just like we're ready to challenge this 129 level. And if we challenge and break through that, it would not be hard for us to get back up here, folks, to around that 147 level. So I think oil is a good play right here. Now, with that said, what you're already seeing the movement in oil, over this past week, I saw a lot of unusual option activity. There was a lot of movement in USO, which is the ETF that tracks the U.S. crude oil. And while we're talking about crude oil, folks, just pay attention to the prices at the pump, folks. I'm telling you, as prices of oil rises, you'll start to see prices at the pump continue to rise. This may be a rough summer for those you know, pumping the gas tanks up. This may be probably one of worst summers we've seen as far as gas prices, probably in a long time, maybe even in history. So that's something to pay close attention to. But way to offset that for all you investors and traders, find a way to invest and trade in some of these oil companies, these oil stocks. This is the USO, and let me look at some near-term action on the USO. Let's go to a weekly chart. And as you can see, we've been on this nice trend up. And as you can see, when we started consolidating, like these moves, these candles will get like a little bit bigger. Looks like we're ready to break out above this level, which is 86 level, 87 level. Like we're ready to break out above the level. We break out above that, folks, we could see $100 in USO in no time. Hence, that's probably why we probably started to see some action in a lot of these USO plays. So look at June 17th and July contracts in the options market. There was some activity that's starting to spark up in the options market. So there was a lot of contracts being traded in June, right around that 90 and that 95 level. A lot of contracts being traded, as you can see on the left side of my screen. And for the June 17th contracts, and then if you come all the way down to July the 15th, those contracts were being traded quite often and frequently as well. Right here, this is what really stood out to me. It's like it could be a spread. Look at the July 86 strike contracts. 5,000 over 5,000, almost 6,000 calls traded at that 86 strike, only versus 560 open interest. That is a huge. That's what we call unusual option activity. When you got the volume that's so much larger than open interest, that's usually heavy, unusual call option activity. But not only did I see unusual call option activity with that strike, let's go down to the 95 strike. Look at that. And it looks like it's almost, you know, 1-to-1 ratio. Same amount of contracts traded at the, close to the same amount of contracts traded at the 95 strike, also traded at the 86 strike. So like, there could be somebody placing a big vertical spread by buying 86s and possibly selling the 95s. So that's just a speculation on my part. But to me, it's like it's a lot of activity here, and that like activity is worth paying attention to. And I just showed you what the charts like. So somebody's betting that we could see prices in USO possibly travel well above 86, maybe even above 95 between now and July. So yes, I did enter that trade myself as a spread on this past week. Now, in addition to that, a lot of these oil stocks, energy stocks are really starting to outperform. You got likes of Devon Energy that's been on a tear, and it's still on a tear, folks. And this one has been even outperforming the that USO and I think XLE itself. Just been outperforming all of those, and it's been on a straight tear for quite some time. So that's Devon Energy. If we look at a longer term chart on Devon, look at that outperformance, and it's even though it's in overbought on the RSI, I still think Devon could find some way to continue to grind higher until we get that final reversal. So Devon is still on, it's on a big move. We take a look at the likes of one that you might be paying attention to, but Warren Buffett has been loading up on Oxy. He's been loading up on Occidental over the past year. That's what made me really start to pay attention to Occidental when I heard Warren Buffett is constantly loading up on Occidental. Now I see why, you know, the Oracle of Omaha knew something well in advance before us. And look at the quarterly chart of Oxy, folks. It's like Oxy, looking at the quarterly chart, it's just beginning. It's just starting to march up. Oxy could very well see price action get up to this point right here, which is around 87. And then if it breaks through that, it would not be nothing for Oxy to get up to 100. That's how the quarterly charts looks like. What the quarterly chart looks like. Here's a monthly chart of Oxy. Again, looks Oxy like it has a lot of room to run to the upside if we look at history and look at where we could be possibly headed. That's Oxy. Another one that showed up on my radar quite often was this one, small energy company, but this one saw some outperformance, and there's a trend line that I drew that looked like we were possibly about to break that level out, 876. This one shows a lot of unusual option activity in the contracts that expired in January 2023. And what I noticed off the bat when I pulled up this monthly chart was this gap. And who knows, we could be possibly heading towards a gap fill sometime this year with this particular company. That's KOS Cosmos Energy. And again, in the options market, this one shows some unusual option activity. Look at all this unusual option activity around the January 10 strike contracts. There's a lot of trading around that level. I mean, a lot. Look at that. 40,000, over 40,000 contracts traded at that 10 strike that expired in January. So maybe somebody's making a big bet, you know what I'm saying, between now and January to see prices above 10 bucks. You know, it may take a while for it to play out, but getting these contracts and then expecting a game between now, you got now to January for that to work out. If that's what somebody's playing, you know, that is a pretty substantial trade and at a very, very inexpensive price. That's Cosmos Energy. Another one, Baker Hughes. Baker Hughes shows some unusual option activity also here recently. I mean, the list just goes on and on, folks. And this one shows some, I saw some unusual option activity in this one that expires in July. I spotted this one on about a week ago. They're still purchasing some contracts, not that much unusual right now, but they're still purchasing contracts with that particular stock. But if you look at the chart itself, shows like there is still some room to the upside with the full stochastics and the wins percentage RSI all starting to turn up. And here's a breakout move. If we break out above that 40, we can see this one also continue to make sharp moves to the upside. A couple more that popped up on my radar. Here's another one. Other energy stock. This one is a natural gas and oil play, I believe. Also showing some big moves in AR. Showing some big moves in AR. Again, this probably be more of a chase. This was already in some super overbought territory, but that's what's showing some strong movement to the upside. A couple more I'll point out just to give you guys some ideas of some trades that you can possibly sink your teeth into while this energy play rolls on. Let's see here. Another one that I liked. I've been watching this one for a very long time. Oops, sorry about that. EQT Corporation. This one is starting to really ramp up in a big way. If we look at a quarterly chart on EQT, looks like it's just getting started. Look at the quarterly chart. And it's like the 60 level could be in the cards, you know, sometime this year. So that's one to keep an eye on, EQT. Another one that caught my attention was some unusual option activity, Southwestern Energy. This one, like it has a lot of room to go if it really starts to kick in an overdrive. This one could be one that could be a better play than some of the others that seem like they run into some overbought territory. It's EQT, I'm sorry, SWN, and this one has been showing unusual option activity. I mean, multiple weeks in a row, and all different types of strikes, expirations. It's been popping up constantly. So this is the option chain of the January 3rd expirations of SWN. You can see some activity around the 8-9 strike, the 9.5 strike, the 10 strike. If you look out to June the 17th, still a lot of activity, and some activity around a 9 strike in July. So there's some activity there. SWN. Let's see what else. And the list goes on, folks. You could just take your pick. If you start to take a look at some of these oil stocks, folks, and just Oh, ExxonMobil was another one that showed some, a lot of activity. And for those who follow ExxonMobil over the years, where ExxonMobil used to be. It used to be well over 100. It got down to as low as $30. Look where it is now. It's almost back at 100. It got down to as low as $30. It's almost back at 100. With more room to upside. This is a quarterly chart. Looks like ExxonMobil is trying to break out in a big way. So that's ExxonMobil. And it's like it could be some type of option strategy that's being played around that $100 level. Yeah, some type of option strategy probably being played around that $100 level on ExxonMobil. What else? There's another one that I saw about a month ago, CTRA. It's like it could be heading towards that $41 level. This one I spotted a couple months ago with a lot of activity. October contracts, July contracts. So that's another one to keep an eye on or possibly put on your radar. That is CTRA. What else? Folks, there's just so many to pick from. I mean, you just take your pick and you can find some pretty good picks in here. Valero, Hess, CPE, Valero Energy. Another breakout candidate. This one's really breaking out to the upside. That is Valero. It's like it's about ready to pass that 133 level and probably go a lot higher. So that's one to keep an eye on. Or just add it to your list, or just make it a part of your portfolio. Look at that. June, it's my first time actually looking at this one since I've been, while I'm showing y'all. I haven't looked at this one in a while, but I was in it before when it was below 100. It's like it's ready to continue to roll on. So that's one to consider, Valero. And I think I'm gonna add that to a new watch for me for possibly a new trade on next week. I think that one's probably headed above 130, maybe even above 140. Valero, and then Hess, of course, another breakout candidate, possibly headed back up to that 137 level. If you look at a weekly chart here, it's constantly been breaking above all of these levels that I've been tracking for a while. As you can see, I got all these lines on here with some levels of resistance that I've been tracking, and it's been constantly breaking right through them all. So Hess, I think, still has more room to the upside. Let's look at one or two more. CPE. CPE. It's another one. Here is, okay, this one is a nice possible breakout pattern. Here is a strong level of resistance here. Like a strong level of resistance around 65. And it looks like we are possibly ready to challenge that level again. So this may be a good one that has not broken out to the upside yet. So CPE, put that one on your radar for sure. It's like it's ready to challenge that 65 level. And we'll look at one more or two more. CVE. So we looked at CPE, then we're gonna look at CVE. This one has been in a steady uptrend. This has been in a steady climb. I still think it could have more room to run. Looking at this monthly chart, look at that. Could still have more room to run. It's just been running consistently. And then Hess, of course, is another breakout candidate. Hess. Oh, I think Robert looked at that one. So Hess, like, it's a nice breakout candidate. What else? There's just so many to choose from, folks. I'll spend a lot of time on this, but I want to show you guys there's some stuff that's working even in this volatility within this market. Here is Murphy Oil. That's a monthly chart on Murphy Oil. If we pull back and take a look at this weekly chart on Murphy Oil, looks like it had a pullback, and now it's ready for a next move higher. That's Murphy Oil and MRO. Marathon Oil, it's been on a steady climb. So you get the picture, folks. There's so much to choose from. And while I'm talking to you, I'm thinking of more. BP. I mean, every stock that I'm showing you right now, folks, show some type of setup where it can continue up towards upside. Unlike some of these other, the regular, I mean, anything that's tracking the regular markets, don't look this promising. So this is BP. Looks like it may be ready for a breakout above this $34 level. That's BP. You have COP, ConocoPhillips. It's been on a steady rise higher. And if you look at a monthly chart for this one has just been on a steady, it's been breaking out consistently. CVX, I don't know if I mentioned that one at all. CVX, Chevron. It too, like it's ready for a breakout above a certain level. If you look at a monthly chart on, so this is another one I've been tracking for a while, which is why I have this old fib on here. It's clearly just breaking out and still marching to the upside. Halliburton, another one looks like it's ready for a fresh breakout. It's Halliburton. It got as high as $74 back in 2014. So that is something to definitely add to your radar. Yeah, Halliburton. So I need to add that one to my radar too as well. So Halliburton is definitely one. It's like it's ready to get started. Give you two more real quick. EOG Resources, another one I've been tracking this one for a couple years because I like the way this one move, especially when it hit that bottom back in 2020. So EOG is another one. Add to your radar. That's on a steady move up. And let's add one more. MPC. Oh, two more. Sorry. MPC. Again, I think we already showed. I already showed that one. PSX. Let me get the last one. Phillips 66. Here is another good candidate. Let me get rid of all of this. So Phillips 66, like it's ready to finally make a challenge at some of these levels of resistance. So 117 looks like it's a good level of resistance, and then 123. Looks like it's a good target to aim for. All right, folks. Hopefully, I gave you guys some insight on what to follow, what to pay attention to with this energy move. Like it's just starting. This energy move is probably ready to kick into another gear. Get in while you can, because I think eventually we could be ready to eventually experience what we've seen back in 2008 when we have this blow off top of energy. Next thing you know, everything comes crashing down. So get in while you can. Take advantage of some of these historic moves in energy. And let's be ready, you know what I'm saying, to move with the flow of this market, folks. Don't be afraid of it, embrace it. All right, folks, until the next video, I am signing off.